Hello and welcome back to America's Forum here on Newsmax TV. I'm John Bachman. On Friday, the digital currency Bitcoin was trading at $220.29. As of today, it was closer to $250, according to the web-based Bitcoin exchanges. Once the largest platform for trading Bitcoin, Mt. Gox, Japanese-based Bitcoin exchange the Japanese-based Bitcoin exchange, I should say, recently halted withdrawals, which exacerbated people's fears about having their wealth in the digital currency. The good news for Bitcoin users is the currency is still trading near $600 on some exchanges. Boston University finance professor Mark Williams was quoted as saying, quote, "If Bitcoin currency and infrastructure are unstable, it is increasingly dangerous to the subject of the global economy to such market risk uncertainty. The longer the virtual currency economy is allowed to grow unchecked, the greater the chance of adverse impact on the economy." Interesting stuff there on Bitcoin. Joining me now to talk about this more, and still with us, is Money News editor Jeff Yasteen. We were talking about Bitcoin a little bit earlier. It seems reasonable enough to be very skeptical of these digital currencies when they're unbacked by any state or real-world goods, but Bitcoin optimists say this is going to be the future. Are they just drinking the Kool-Aid?
I have to sort of hedge on that. I'm not sure. It's a vast experiment that we haven't never seen the likes of a currency like Bitcoin until now. But the concerns about whether it's this big threat to the global economy, the U.S. economy, I think are pretty overblown at this point. I mean, the transactions we're talking about may be sizable, but they're not the kind that are, it's not like the derivatives and swaps and the other things that are in the many billions upon billions of dollars that we see every day in the sort of mainstream banking system.
All right, for another take on this, let's bring in Duke University Professor of Finance Campbell Harvey. Mr. Harvey, it's great to have you with us.
Good to be on the show again.
And so what do you think about this Bitcoin being able to potentially put the global currency markets at greater risk?
Well, the first thing, Bitcoin is not just a currency. It's a network, and it's a way to exchange ownership very efficiently. And it does have some advantages over what we usually think of as currency. The transactions costs are very low. There's no fraud. There's no counterfeiting. There's no double spending. There's no centralized authority to do this. It's extremely secure. It's essentially unhackable. What you mentioned in terms of Mt. Gox, that's a third party. And the problem that they have has to do with their software and how they communicate with the Bitcoin network. The Bitcoin network is secure and has never been hacked, and to attempt to hack it would be extremely difficult.
And so what about this? What about this, Jeff? The fact that it's not backed by gold. We hear the U.S. dollar backed by the full faith and credit of the federal government. Some people might shrug their shoulders at that statement now, but when we look at this, guys, what does that mean? We heard a lot of good things from Professor Harvey right there.
Well, I don't think Professor Harvey would disagree. I mean, when we look at what the dollar really is, it's not backed by anything except our faith that it's going to be worth something and somebody's going to accept it. When you look at it that way, Bitcoin really isn't any different. It's just new and unfamiliar to many people. I don't know, Professor Harvey, what do you think?
Well, actually, the U.S. dollar is backed because even though you can't exchange it for gold, the U.S. government enforces a number of things. Number one, you must accept U.S. dollars as payment. It is legal tender. Number two, the government has the ability to tax you, and you have to pay in dollars. And number three, if you don't pay your taxes, you can go to jail. So there actually is something behind the dollar, whereas Bitcoin, there's nothing like that. There's no centralized authority. There is no underlying collateral for it. The value of the Bitcoin is the efficiency in terms of transactions. So there's no chargebacks. There's no allowance for fraud. There's no back office to verify ownership. There's no transaction charges. So you put all that together, and that creates value. It's a way, as I said, to efficiently transact, and it is potentially, and who knows, if this will happen, but potentially an extremely disruptive force when it comes to financial intermediation.
Yeah, go ahead, sorry, John.
Well, that's the concern. That's the concern,
Yeah.
really, is that this could be disruptive. We've heard some discussions about some ways that the federal government, Campbell, might take a look at trying to regulate this. Do you think that would be in their best interest at this point right now? Should they try to get involved, or would they be perhaps going on a fool's errand if they try to do that, considering the way Bitcoin has been set up?
Well, right now, as you mentioned, it is pretty small. It is growing very quickly. And the chairman of the Federal Reserve actually wrote a letter in December saying that, well, there could be some issues in terms of like money laundering, which is the main thing that's been raised as a negative. But the chairman also said something very interesting, that he said that potentially this holds some promise because it allows people to transact in a much more efficient way. So you save money on transactions. That's a good thing for the economy in general.
All right, so the jury's still out on Bitcoin, but interesting insights from both Jeff and from Professor Harvey right there. Moving on, we do want to talk also about China this week, and India and gold consumption. China and India, both two countries that account for about 60% of the global demand for gold right now. In 2013, China consumed 1,066 metric tons, India 975, in comparison with just 190 metric tons here in the United States. Why are people in China buying so much gold, Campbell? Professor Harvey?
Because they don't trust their government. And it's the same in India. And India, it's worse. There's no way out. You can't take your local currency and buy U.S. dollars. There's no way to do it. So basically what people do is they go to gold, even though they know gold is quite volatile. So gold is more volatile than investing in the stock market. They know it's volatile, but they don't have any choice. It's their only way to hedge the uncertainty that has to do with devaluation or political instability.
Professor Harvey, do you see, I know in India last year they had these, I think there are import tax restrictions that were seemed to be designed to curtail the demand from Indians to import gold into the country. Have those been lifted, or do you see those getting lifted at some point?
Okay, and Professor Harvey, we'll ask you to hold that thought for just 1 second. We'll have you guys both back. We got to run to a commercial break real quickly. We'll have more from Jeff Yasteen, Money News editor, and Duke University finance professor Campbell Harvey right after this break. Of course, you're always welcome to join us and participate in the discussion. We'd like to hear from you on Twitter and on Facebook as well. We can put our contact info up on the screen here, and we'll be right back on America's Forum right after this.